Hello everyone, my name is Financial Charles and today is November 19th of 2023. Current Bitcoin price is about $36,870, so pretty much the exact same place as we've been for the past whole November, I would say. Nothing too insane right now. Obviously, I'm saying that we're at almost $37,000, and the whole summer we've been in this $25,000 to $30,000 range, and the whole year we've gone up and up. So it's not, oh, it's nothing. But today, yesterday's video, I already talked about what I needed to talk about in terms of Bitcoin price and price action and all that. Today, I wanted to talk about why Bitcoin is better than the S&P 500, or why Bitcoin is better than stocks in general. So let's switch over here to the S&P 500, and I just want to explain something when it comes to pricing assets real quick. And a lot of people don't really understand this, and it's such a shame. And I feel like it's very important to understand how assets are priced. It's kind of like understanding algebra before understanding calculus. It's kind of like understanding the alphabet before understanding sentences, if that makes any sense. So the S&P 500, obviously, the difference between S&P 500 and Bitcoin is a currency. S&P 500 is an index that represents the top 500 companies in the United States. So this is the price action of what we're looking at right now. This is the S&P 500, the index value in terms of US dollar over time. So that's the key word right there, in terms of US dollar over time. When you take that into consideration, of course, all these assets are just going to go up. And the reason is because there are more dollars in circulation per unit of S&P 500. That's the same reason why gold goes up. More dollars come into circulation, while the amount of gold, it doesn't inflate as much as the dollar. With Bitcoin, that's the whole argument with Bitcoin, along with many other things. Bitcoin is an amazing thing. There's so many more dollars per unit of Bitcoin. That is why as more dollars get printed, the dollar value of a Bitcoin goes up, because there's more dollars in circulation, while the Bitcoin units of Bitcoin, the amount of Bitcoin in circulation, does not inflate as much as something like the US dollar. In fact, Bitcoin is the only one out of all those assets that I just listed that's actually fixed, it's actually finite. With gold, it's not even finite, it's just scarce. If the universe is infinite, you can travel infinitely far to find gold in space. We haven't even mined up all the gold on Earth yet, and we can still do that, and we can mine asteroids. If you were to travel light years and light years away, it's like you're not going to find more Bitcoins. Bitcoin exists on the internet. It exists as a decentralized blockchain that, if you even try to make a new one, people try to argue about, oh, Bitcoin 2, Ethereum, this, that. It's like, it's not the same blockchain. It's a completely different thing. As soon as you hard fork it, which means as soon as you make a major change in which it is no longer previously compatible with past versions, now what you didn't even improve Bitcoin, you didn't make a better Bitcoin, you just created Bitcoin Cash. You just created Bitcoin Satoshi Vision. So anyway, that's not what this video is about. I tried to not make it about that. I tried to make it about Bitcoin versus S&P 500. So to reiterate, the S&P 500 is simply an index that represents the value of the top 500 companies in the United States. Bitcoin is a currency, and it's a store of value. So they're two very different things, and it's just a shame that there are just some people that they don't understand what the difference is, but those are also the same people that think that just because Bitcoin crashes, or not even Bitcoin, this is the chart, the S&P 500, just because stocks crash, some people think, all right, well, it's game over. This is why you never invest in stocks. But in reality, when you don't invest, you're opting out to lose. You're signing away your chances of winning at all. What you're basically saying by refusing to invest in any asset, is what you're saying is, I accept the fact that I'm going to lose, so I'm going to lose on my own terms. That's what you're saying by not investing. If you're scared to invest because, you're scared that the prices are going to go down, that's a perfect example of not understanding the algebra before you go in to learn the calculus. And that's why when it comes to, making videos about trying to educate people on these assets, you can't you can't teach a kindergartner, US history. You got to teach the kindergartner the alphabet first. You got to teach him vowels and all that stuff. So it's really hard for me to target. I don't know. But anyway, let's just move on from that point. The reason that the S&P 500 goes up, or these top 500 companies go up, you would think is because they provide value, right? Like they take in resources and then they create something. They create either a product or a service that benefits other people, and other people are willing to pay a premium for that, which allows the company to be worth more, because now what they're doing is they're making products that are worth more and selling them at a higher price than what they bought them as. So let's say a supplier buys raw materials. They will use that raw materials and they will pay for labor and the raw materials to create something, to create some type of product, and that product is going to be worth, let's say, boom, 10-fold, 100-fold of what it costs for the materials and the labor to create it in the first place. And that's how businesses grow, right? However, you also have to understand that the U.S. government prints on demand. They will always print. They will not stop printing, because at the end of the day, it is humans that control the money printing, and humans are flawed, and it's all humans can become corrupt given certain incentives. And when you're standing behind the money printer, it doesn't matter how sound of a person you are, you will crank the money printer, because you are the one standing next to it. You are the one that benefits from this money that's being printed. So that's why, the big dogs at the top, the big dogs closest to the money printer, they will continue to print. And as I said earlier at the beginning of this video, as more dollars are existing in circulation, assets that don't inflate as much as the dollar, in order to go back to the equilibrium, each unit of the asset has to go up in terms of dollar value, because now there's more dollars in circulation. It's very simple. If you just, think about it like that, it's just very simple. So given that, I will show you this chart of the S&P 500 in relation to the amount of dollars in circulation. And I've showed this chart multiple times on the channel already. And as you can see here, ever since the beginning of this chart, it begins somewhere around 1960. This whole entire time, it's 2023, for over, what is it now, 40, 50, over 60 years now, the value of these companies, these big companies, it goes sideways. So in terms of, these companies, turning those raw materials and labor into something more valuable, they are barely doing that. In fact, it's like some years they're down, some years they're up. So in terms of dollars, in terms of the solid dollar value over here, of course, it's just going to go up, but that's because the Federal Reserve keeps on printing money. This is the reason why the S&P 500 goes up. When you take in consideration how much money has been printed, you could see that the S&P 500 and all these stocks and all these companies are nowhere near as productive as what we were led to believe this whole time. And so you could have a college degree in finance, you can watch all these YouTube videos, you can talk to all these people. There are some people that are so smart and they still don't understand this very concept. The assets grow in value simply because the dollars keep printing, and that's what it is. So let me take you over here to gold. All right. Well, actually, before I do that, let me explain here. The reason that this starts in 1960 and not goes like before is because the U.S. economy didn't really start printing until they didn't start going crazy free for all money printer until around the 1970s, when they did Executive Order 6102. What that was it no longer allowed anyone to trade in their dollars for gold. And let me explain what the dollar was in the first place. The dollar, when it originated at the very beginning of the Federal Reserve, the dollar was supposed to represent a unit of gold, and you were supposed to be able to turn in those bills in exchange for gold at the banks. All right, so with each dollar that was in circulation, there was gold backing it. So when you take the dollar off the gold standard and now you just allow all these dollars to be printed, meanwhile gold stays at the inflation rate of 1.5%, and you just inflate willy-nilly, as many more percentage above 1.5%. Each unit of gold becomes more valuable because more dollars are existing in comparison to the amount of gold available. So by the time FDR, President FDR, he confiscated everyone's gold in the 30s, and I'll get to that in a little bit. They confiscated it in the 30s, but it wasn't until the 70s where the money printing was so rampant where they had no choice but to take the dollar off the gold standard because they didn't have enough gold to back the amount of dollars in circulation. That's why we are off the gold standard. And when, it's the most powerful thing to be the country that controls the world reserve currency, and to think that nothing is backing this currency, and you just have the power to print it infinitely until everyone wakes up and realizes what's going on, is this is the most, of course, the United States is the most powerful country in the planet. It's because we control what the world reserve currency is. We control how much of this currency is in circulation. If a bank needs to be bailed out, if a Silicon Valley bank needs to be bailed out, they will just simply print all this money. And I don't know if you guys remember, but when Silicon Valley Bank went bankrupt, USDC completely froze. Coinbase or Circle, the owners of USDC, they completely suspended, they suspended redemptions of USDCs for real dollars. And that speaks volumes. Just a black swan event like that can just prevent all your safe stable coins, the safest stable coin of all, USDC. It can prevent it from even being worth anything in the blink of an eye, just like that. And then as soon as you got the news that Silicon Valley was going to be bailed out, that's when they allowed redemptions. So that in itself should tell you that not all USDC is backed by a dollar. And if not all USDC is backed by a dollar, you can even assume not all Tether is backed by a dollar. The company, Tether or Circle at USDC, they can release all these USDC coins without having the amount of dollars to back it. And that's the issue. That's the issue with that's why the dollar went off the gold standard, is because now there's more dollars in existence than the amount of gold that can back it. But anyway, let me give you a little history lesson on gold real quick. If we zoom in all the way, this goes all the way back to the 1800s, really. And so this was back when gold was, it was a store of value. Gold was the, store of value for 6,000 years for humans. So of course you shouldn't expect the price of gold to, fluctuate that much back here. And also you need to, why is it not fluctuating back here, is because this is measured in dollars. This is the value of gold in terms of US dollars. They weren't going crazy with the money printer back then because the dollar was backed by I don't even think there was a dollar back here. I don't even know at this point. But they weren't going crazy with the money printers. In the 1930s, right? It's crazy. Gold before the 1930s was $20 an ounce, and it was that way consistently for a very, very long time. And then all of a sudden in the 30s, FDR made it illegal to own your own physical gold. So they had, they had entities. I don't know if it was military or what, but they even went door to door to confiscate people's gold. So unless you buried it in the backyard or buried it in the bunker or whatever, they took your gold. And what's crazy is that, here it's boom, 1930, 1931, whenever it happened, the president of the United States all of a sudden out of nowhere says, all right, it is illegal to own gold. It is illegal. So we're going to come to your house and we're going to take your gold because it's illegal to own gold. So once they took everyone's gold, and gold is what's supposed to protect you, right? Gold is what's supposed to protect your purchasing power. This is what gold did back in the day. And now the president of the United States is telling you it's illegal to own gold, we're going to confiscate it. So now all these people that wanted to protect their wealth in gold against inflation, against, a centralized bank, you know what I'm saying? Like, they took away your gold, and then all of a sudden it goes up to $35 an ounce. They manipulated the price to go from $20 to $35 an ounce. And then after that, I forgot when they legalized it once again, but they said, all right, it is now legal to own your gold coins again. You can now physically hold gold coins. But and isn't it crazy how they forced it out of your hands at $20, and they gave you permission to buy back once they manipulated the price to $35 an ounce. That is highway robbery, and that's how if you learn anything about the United States, and if you look at the history of the United States, it's one of the most diabolical entities that have ever existed. They're robbing their own people of their wealth, of their purchasing power. And the reason that they do that, and they do that to this day, is because they want to keep the poor poorer and the rich richer, so that way the poor, they have no choice but to continue working so they can produce things for the rich, so they can continue to live lavish lives. This is what they're doing to us, all right? Now you start to see the price go crazy once, the 70s hit, because this is when they said, all right, you can no longer redeem your paper bills for gold anymore. You can no longer do that. Instead, the new reserve currency is going to be the dollar. You don't even need gold. It's the dollar. And the reason they did this is because was in order to be able to print as many dollars as they want without having the gold to back it up. So as soon as they did this, you could see that the price of gold in terms of US dollar just skyrocketed up, and it continued to do so. Now, obviously, there was this decade of just down, or not a decade, but multiple decades, right? This started in the 80s, and then it didn't bottom until the 2000s, right after 9/11, actually, which is very interesting. As soon as 9/11 happened, just went right up. And I'm not saying 9/11 caused this, but I mean, I don't know. We might just have to analyze that in another video. But as you can see, as soon as they took gold, or as soon as they took the dollar off the gold standard, gold became so much more valuable, because you're printing unlimited dollars, but you can only mine 1.5% of the supply of gold. That's just how, that's the inflation rate of gold. And then if you look at Bitcoin is literally a better gold. Bitcoin has so many more things going for it than gold, but at the very base level, it's similar to gold, because gold was a store of value because it's hard to create, it's hard to counterfeit. I mean, nowadays you can, but for the past 6,000 years, it was rare, so you couldn't really inflate the supply. It was precious. You couldn't chemically break it down into anything else. It's an element. With Bitcoin, it's even more scarce than gold. In fact, it's fixed. Gold is scarce, but you can continue finding it over time. With Bitcoin, it is guaranteed that after the year 2140, you cannot mine anymore. It's guaranteed right now that there can only be 21 million coins in existence. That's what it has over gold. So it is already, from that point alone, it is already a better store of value. And to argue about it, it's not physical, so I can't see it, that's an old mindset. That's a pre-algebra mindset. You have to learn the algebra before I can even teach you about calculus. And when you say something like, it's not physical, I can't touch it, it's like, you can't touch a YouTube channel, but YouTube channels, they provide so much value and so much knowledge. But so just because you can't touch a YouTube channel, does that make it unvaluable? Absolutely not. This is an indestructible unit of account. This is what Bitcoin is. So to not give it any value due to it not being physical, you're showing that you don't understand the algebra yet. So how am I going to teach you about the calculus? But anyway, not only that, Bitcoin is, you can transfer it and it confirms to the other address in 10 minutes. And you could transfer billions of dollars worth of value, or you can even transfer a penny worth of value. And then it gets to anywhere in the world. It can cross borders. You can send to someone in Asia. You could send to someone in America, send someone anywhere in the world that accepts Bitcoin. You can send it anywhere. With gold, if you're a big entity, if you're a government, you have to sail, you have to have a ship, and you have to employ people to be on the ship. And this is so expensive. All of this stuff, it's such an expensive process. With Bitcoin, you just pay the one transaction fee. And if you transact on top of the Lightning Network, now your transaction fees are fractions of a penny. You don't have to pay gas for a ship to sail to New York so you can take the gold back. You don't have to do any of that. And also with gold, you can kill the person that has the gold. You can kill them and then take their gold. With Bitcoin, you cannot kill me and take my Bitcoin, because once you kill me, those Bitcoins are gone forever, because I'm the only one that knows the words to the Bitcoins. I'm the only one that knows the words. So if you kill me, instead of a peaceful negotiation, you will not get your coins. Bitcoin incentivizes negotiation, whereas something like gold incentivizes violence, because if someone has $1 million of gold, you can kill them and then raid their property. You can raid their land for their gold. You can never raid my Bitcoin wallet because you do not know the words. The only place that the words exist were in my head, and you killed me. You know what I mean? So that Bitcoin it's orders of magnitude more scarce. So yeah, I mean, that's that. I know I tried to make this about the S&P 500, but I just ended up making it about gold, but it's whatever. The video's getting a bit too long now, and I have to go back to work, so I will, the next video, I will continue on and hopefully focus more about, S&P 500. But anyway, hope you guys enjoyed the video. Please like and subscribe, and I will see you in another video.